Good morning, traders. Jefferson Fossey here with Walsh Trading. Happy Friday, everyone. It is Friday, November 21st. It's a couple ticks here after 7:45 here in the morning. Yeah, lots of things going on here overnight and this morning. Let's take a look and see what happened here yesterday, what may have happened overnight, and what might happen here perhaps later on today. Please keep in mind that futures trading does involve substantial amounts of risk, certainly not suitable for all investors, traders, or producers. Looking at the February live cattle here. Hang on one second. Let me click something. There we go. February live cattle were $1.85 lower here yesterday, closing underneath that 200-day moving average for the first time ever. They bounced off it here 3 times here over the past week and a half, 2 weeks, but yesterday lower lows, lower highs, pushing the market solidly through that. Feeder cattle were weak here as well, $5.07 lower, 316.37 half. Lowest close we've had there in a week since last Friday. Short-term averages 5-10-day did hook over to the sell side with Wednesday's trade. Expect sharply lower cattle prices here today. The Brazilian tariffs have been removed, so I would assume that's going to have a very bearish impact here on the cattle market. It does not change anything fundamentally. We've already imported a record amount of beef this year from Brazil and other countries. The tariffs have been in place there since August. To have them on for a few months and then remove them retroactive here to a week or so ago, it's not going to change the supply and demand equation a whole lot. We still don't have more cattle. We still have more people to feed, but the market sentiment and the perception has certainly changed. So I would expect a sharply lower push today in cattle. I don't know if they'll stay that way, but I expect them to rip lower. Give you an example here. Let's look at March coffee, $17, $18 lower here today. Huge gap down. Brazil exports a lot of coffee here to the US, so those tariffs come off, market prices drop. Expect the same thing here for the cattle market today. 62 higher here in February lean hogs yesterday. Very much an inside day, closing up above the 5-day moving average, but the 10-day held a little bit of resistance right around that 80.12. Finished 79.65. Stochastic starting to hook up here just a little bit. MACD is starting to lighten up here as well, but the market's been in a pretty strong downtrend here. We might get a little bit of profit taking bounce here today, but I think overall the hog market still wants to head lower. Look for resistance here against the July 15th low of 80.17. And also we will get a cattle on feed report today after the close. Most estimates that I've seen, if the numbers came in that way normally, I'd expect it to be a bullish move following the cattle on feed report. But given the tariff news, given the way the market's been moving lately, maybe not. March corn closed lower here yesterday by 3 3/4 cents. It's down another penny here overnight. Closed below that 50-day moving average here yesterday. Not a particularly positive sign. It's the first time they've done that since, October 21st, roughly. But that time we were down under for a day, traded under for the next day, and then bounced right back up again. 100-day moving average support here is right at 435 3/4. Market finished the overnight session down a penny, 436 3/4. There is trendline support here. Doesn't really have to mean much. This is just a simple trend line drawn off the August 12th lows to connect the October 14th lows. Should hold some support there, but stochastic's pointing down. Volume was pretty high here yesterday. Corn market might want to keep going back here just a little bit. Kind of surprising, but to me anyway, but that's just what we're doing here. January beans also broke trendline support here yesterday, finishing 13 3/4 cents lower at 11.19. This morning they're down another 3.5 cents. Also breaking short-term trendline support here as well. Don't think this is going to be a big bearish turn here for the soybeans, at least in my estimation. I would look for support here, $11.10, $11. Those two levels may offer support even if the market trades back. I don't think it's going to go back and fill this gap here from just before Halloween. I don't think we're going to fill that gap here for a while. I think that $11 support will take over before we get there. January soy meals up a couple of ticks here this morning, but it was down $4.10 yesterday. Short-term averages, 5 and 10-day moving averages are crossing over to the sell side here with the overnight trade. May want to wait if you're going to follow that type of trading signal here, because those sometimes, if we go ripping back higher here, by the end of the day that signal will vanish. So maybe use a sell stop underneath yesterday's lows, which was 316.70. Same thing here with meal that I said with beans. I don't think it's going to get very bearish, but I do think you can pull back to this 310, 312 sort of area here and look for some support right in there, kind of right in the middle range of where we were here on from April until about middle of June. January soybean oil down 55 here this morning, bouncing off that 200-day moving average, below the 50-day moving average here as well, below the 5, below the 10. Fading away here 3 days in a row, away from that 100-day average, staying pretty weak here. Market had a little bit of a bearish shock here earlier this week with the EPA trying to redo or not redo their biofuel standards, maybe importing used cooking oil instead of using soybean oil that's produced domestically. The opposite of that was what put the big bullish spike here in the market in the middle of June. But if we're not going to do that, maybe the market's going to trade back down. There is some trend line support here just underneath the overnight low. I'd see that trend line here today at about 49.65. But yeah, everything's kind of pointing lower here for bean oil, stochastics as well. Looking at March Chicago wheat here this morning, short-term averages there also flipping over to the sell side in Chicago wheat as well. Yesterday down 8 3/4 cents to close at 5.40 3/4. This morning we're down another penny and 3/4 here at 5.39. Finding some support here, interim support here from that 50-day moving average. If it does bounce and it does hold, that is very bullish in my opinion for the wheat market. But if it does not and the market keeps going down, expect new contract lows. Looking over here to KC wheat, those charts flipped over to the sell side here yesterday, closing below the 50-day moving average, down 8 cents on the day. This morning it's only down 1/4, well off its low. Got down to what, 519.5, and we finished the overnight session here at 523.5. So it is trying to come back up. Same thing here for KC wheat. If we can't get back up above this 50-day moving average, all bets are off, and we're going to set new contract lows. If they can rebound a little bit, get some momentum, I think we can not get a huge bullish rally, but I think we can see prices go higher from here. Other markets that I've got new signals in here today, 10-year notes. Where's that at? There it is. They're up 13 here today. My chart's flipping back over to the buy side. Highest price of 10-year notes have traded here since October 29th, breaking out of this kind of trading range. They've been here for the last 2 to 3 weeks. Kind of a bullish push there, back up above trend line. That was support for many months, around 5 or 6 months here, until we broke through it here late in October. Now we're back up above it. Big volume here yesterday, finishing the day up 6, but testing that 100-day moving average support and reversing higher. Now some of that might have had to do with what was going on in the equities yesterday. I'll get to that in a moment. Crude oil here is down 72. My chart's flipping back to the sell side here. The markets are getting weird. It's, the 5 and 10-day moving averages don't often cross as whipsawy as they have been here recently in many of these markets. Crude is just another example. And turn to the buy side here yesterday, and then today's right back to the sell side here, down another 69, but well off its lows there. Yeah, it's kind of a weird thing. We did spike down here to lows we haven't seen here since October 22nd. There is bearish momentum, and currently we're well up off the lows here in January crude. And yeah, I'm not sure which way we're going to go here, because everything's getting a little bit whipsawy. Yesterday in the stock markets, I'll just pick on the S&P 500 for right now, and then I'll be done here for the morning. Big bearish day here yesterday. It's down 104, closing underneath that 100-day moving average, something it has not done since May 9th. That is not a particularly strong sign. Now this morning they're up pretty good. They're up about 34.75 here at the moment, but the 100 days still going to give you resistance right around that 66.08 area. All of the stock indexes did that. NASDAQ was down hard yesterday. Big bearish engulfment here, 590 lower. Dow futures Big spike high and a reversal lower, finishing down 383. Not the biggest down day for the Dow that we've seen in a while. Russell 2000 also had a very large bearish engulfment, settling yesterday down 44.20. This morning it's up about 1880. A little bit of profit taking bounce here. This market's been trending lower here since before October. That's all I've got time for here today, folks. I hope you have a great weekend. And if it can be of any help, please reach out, let me know. Remember to like, share, and subscribe.